Citizens of the world, welcome back to another Keep Yours podcast where we try and keep a few extra dollars in your wallet. Today we continue our episodes on COVID-19 and the CARES Act. And today the big question is, where's my money? And we all have this same endearing frustration of the government tells us they're doing all of these great things, that they've got all these programs for us, Paycheck Protection Program, EIDL loans, unemployment benefits bumped up, but no one's got any money. Well, that's not entirely true. A couple people have gotten a little bit of money. But for most of us, where's my money? And I just want to start by talking about the major problems that we've got with this program. And there are really a lot of them institutional problems, that you can't really shove this amount of volume of work into a system that's not really designed for it and expect great results. So if we start with just the guidance from the Treasury Department, interim final rule, just makes me shake my head. Well, what are you talking about? How do you have interim and final in this back to back? Those don't mean the same thing. One is final, one is interim. They are not supposed to be together. You don't have interim final, right? You don't go take your finals in college and then they're like, oh no, that's an interim final? Yeah, we're going to have the real final later. It's either a final or it's not. You don't go to a football game and they go, oh, well, we have the interim final score. No, it's the final score of the game. It's not interim, you know? So the guidance alone is that way. And inside of that guidance is also confusing things on how we're going to calculate amounts. And the biggest problem with especially the PPP program, for the Paycheck Protection Program for loans for businesses that can be forgiven, you've got two major problems. One, how are we calculating amounts? And I would say that the frequently asked questions provided by the Treasury Department versus what it actually says in the rules seem to be contradictory. And perhaps the Treasury is embellishing. And let me just show you what I mean here real quick. So if we go to what the Treasury has now said on, this is their frequently asked questions. And I'm at question 7, and it says, it excludes from definition of payroll cost any employee compensation in excess of annual salary of $100,000. Does that exclusion apply to all employee benefits of monetary value? And in here they say, no, it only applies to actual cash compensation. So that means that you get an extra loan for benefits. So it's $100,000 for wages, then you get to add in benefits. But if we go to the actual CARES Act and we look at what this says, it says payroll costs mean these things. And then down here it says you shall not include compensation in excess of $100,000. So they're saying that that equals AA here, only compensation, and then we get to add in the other things. This is very confusing, and for a lot of people, we did it as the 100,000 is capped after all of these things included. And that's how I did my calculation too. And in fact, the worksheets I provided were that way as well. And when I went over this with bankers, they said that was their interpretation as well. So it's very confusing overall. And what does that mean? Well, that means that here's the worksheets that we did before. So this is the original worksheet that we did, and we have the totals here, and then we subject the total to the $100,000 limit. But now what the Treasury is saying is that limit should be only on the wages part, then we subject the limit, then we get to add back the other parts. So the difference isn't massive. And we go from a $127,000 loan calculation here to $132,000, so $5,000. And on the forgiveness part, who knows how that works out yet? But it is different. So this is one of the problems that we've had with the guidance from the Treasury, is it doesn't necessarily correspond to what we're doing. Another big problem that we've had is the law itself says we're going to look at the last 12 months of wages. Well, finally the Treasury came out and said you can use 2019, which makes sense because it's hard to verify that wages paid through Q1 2020, which ended just over a week ago, and basically at the same time that you're supposed to be preparing to file for these loans, it's impossible for the banks to do the underwriting and tie out the amounts done. And that leads to the next problem that we've had with this program, underwriting itself. And while it's easy for a citizen, for one of us to say, this is the law, this is the way they say it works. The Treasury says that the banks don't have to worry about giving us the money, so give us the money. Well, that sounds nice, except for if you understand history. And history says that the SBA has oftentimes not paid banks back because paperwork's not perfect. So banks are worried, very worried, that they're not going to get reimbursed for these loans if they don't get repaid. And since there's no collateral, there's no guarantees, there's nothing behind these loans, it's you sign up, send in the application, and the bank's supposed to give you money. That doesn't make a bank feel warm and fuzzy. The banks are so used to these underwriting standards where you present all of your information, it's reviewed, that's reviewed again. They usually ask you for more information to verify all of the numbers. Now there's no verification. That just isn't normal for a bank process. They can't even begin to think about, I'm going to issue you a loan with no underwriting and no verification of that information. It just goes against everything that the system's been set up to do. And then probably the biggest problem that we have with all of this is what we'll just call the pipe. How big, and the easiest way to explain this is traffic. So if you live anywhere near a big city, we all know we end up with rush hour traffic. So let's just say that your city, on average, that I-10 runs right through the middle of your city, and on a normal day, during an hour, 50,000 cars pass through. Well, now all of a sudden, there's 50 million cars that need to get through. How long is that going to take? How long is that highway going to be a traffic jam? And the answer is it's going to be a traffic jam for a long time because the highway is not set up to deal with that kind of influx of additional volume of cars. So this is the same problem the SBA has with getting loans. One of the videos that I watched on the CARES Act and loans was done by Colorado Lending Source, a nonprofit that helps a lot of businesses and oftentimes playing intermediary between banks for loans with the SBA. So if you wanted to get a regular 7A loan for your business, or if you wanted to buy a building through your business, oftentimes your bank would go through Colorado Lending Source to go to the SBA and get that loan. And oftentimes Colorado Lending Source is also doing the administration of the loan, similar to how your mortgage might be on your house. If your loan is sold, it still might be done by a mortgage provider, even though your loan has been sold to Freddie Mae or Fannie Mae or Freddie Mac. So it's the same kind of deal as they're the middleman for us. And in their presentation, they talked about their volume of loans. And last year, they did about 125 loans already. So that's one state. Colorado is a medium-sized state. So even if you multiply that, times 100, we're talking about 10,000 loans per year maximum. And the SBA typically does about $25 billion in loan volume. Well, now they're supposed to do $400 of loan volume, so 15 times the amount they normally do. And they're supposed to do that in a couple of weeks instead of years. So again, you go to how big is the pipe that everything has to run through. So all of the banks have to get all their information into the SBA. This is the system. The system's design is this big, but you've got this much information coming in. It's a massive difference. And it's constant, and it keeps coming, and it's not made that way. Oh yeah, and by the way, it's not like the SBA is even running on all cylinders because COVID-19 is affecting them too. So they have employees working from home. They have people who aren't in the office. They're trying to figure this out as well and develop a whole new system for this. So you have an underwriting system in the banks that is not really set up to do these kinds of loans in this kind of volume. You've got the federal system as the SBA themselves not set up for this kind of volume. And as of Saturday, they said there are 550,000 loans approved for $141 billion. So in reality, they've done a decent job. Now, when will we see our money? That's a whole different question. Who knows? Inside of the Treasury Department's frequently asked questions, I believe, they talk about it in here, and they say it's supposed to be within 10 days. And do we believe that that's going to happen? Maybe not. I hope it does, because it also says, when do we... So here's the answer on payroll for 12 months. And also in here, they go through when is the loan gonna happen, and it's saying it's supposed to happen within 10 days. Now, is that really gonna happen? Not sure. Not really believing it. And here's the other problem that we have with this loan. So, when does the 8-week period for forgiveness begin? When does this period begin? It begins the date the lender first gives us money. Okay, so then if I'm been paying payroll for the last month for people that I'm carrying, that's not forgiven, but only future payroll is. That's not really that useful. It should be from the day you start carrying employees that you're affected by COVID-19. Again, problems with the loan. So here's where it says the lender must make the first disbursement no later than 10 calendar days from the date of loan approval. How is that going to be enforced, and how are we going to make sure? So my loan for my business got approved last week, so they have 10 calendar days to give me my money. Do I believe that that's going to happen? Not entirely. Again, too much money to be shoved through these little pipelines that has to go through. So there's been a bunch of mess with this. The other thing that they keep doing is changing the rules in general. So the EIDL loan is a perfect example of this, where before they said you can get $10,000 of basically immediate forgiveness just by asking for it up front. Well, they realized there's a loophole in there that, hey, I can go apply for that EIDL loan for my business. Meanwhile, I'm going to go apply for this unemployment over here. I'm going to get $10,000 here, plus I'm going to get a minimum $2,400 a month for 4 months over here. So I'm guaranteed $20,000 even if I made $1,000 last year. So if I was self-employed and made $1,000, I can go get 10 grand here and 10 grand here. That seems like a pretty good deal. So they realized there's a little bit of a loophole there. So they said, okay, now you can only get your EIDL loan up to $1,000 per employee. Still free money, but again, that program is not well funded. The SBA is very overwhelmed because they're actually handling that program. So very few people are getting EIDL money quickly. And that's also a problem. So I want everybody to understand the system problems with how they're trying to allocate and get money to people quickly. And the system just doesn't allow for it. So we have to keep being patient. We have to keep waiting for our money. For those of us who are somewhat affected, it's an inconvenience. For businesses that are heavily affected and need this money, it's a major problem. Now, the next big problem we've got is guidance for self-employed people. So if you're self-employed, which they tell you in the rules that contractors are supposed to be, actually it's in the, I'm sorry, I have to go to the final rules that aren't final, the interim final rule. And it says independent contractors have the ability to apply for the PPP loans on their own. So the big question is, what are they going off of for independent contractors? Because they didn't release additional guidance. That's what they were expecting. How is a bank supposed to calculate exactly how much an independent contractor can receive? And at the end of the day, what it seems like most banks are going with, because as of Friday, independent contractors are allowed to apply. So it seems like what most banks are going with is, what amount did you pay self-employment tax on last year? And then we're going to limit that to the 100,000. And then are we going to allow back the profit sharing contributions, healthcare contributions? I don't know. I wish I had a perfect concrete answer for this. Everyone was hoping the Treasury Department would come out and go, this is how we're going to calculate it, but they just said, calculate it the same. We've given you the guidance, go. Which again, for banks is going to be a holdup. So I'm interested to see how this plays out. If I was an independent contractor and I was submitting, I would take my 1040 personal income tax return Schedule C and take the bottom line number of that. I would add back in what I paid for self-employed health insurance, what I paid for any retirement plan contributions, and I would take that number and multiply it times 2.5 and ask for that loan amount. That's what I would do. It seems like there's some conflict on this in terms of how they're going to calculate, just like I showed you with the calculations before on what works, what doesn't. What are they saying the final rule is? What are they saying it's not? Are they contradicting themselves? And it seems like there's contradictions all over the place. And it's basically a do your best. But I have a feeling that different banks are going to treat and calculate amounts differently. And that's just the way that's going to go. So then we go back to talking about our strategy. Which loan do I go apply for? Do I apply for an EIDL loan? Do I apply for a PPP loan? And my general guidance would be this. If you're not working anymore, if you don't have work right now and your work's not going to come back very quickly, then the EIDL loan and unemployment is probably the right path for you. Because if you're in let's say you work at a hotel, or you work in a casino, or somewhere that is going to take a while before social distancing, or a restaurant. Social distancing is going to be around for a while until we can develop either some way to treat this that's beyond just putting someone on a ventilator and hoping they live, or we actually have drugs that treat the virus, that prevent the different things that are killing people, and or we develop a vaccine. We're going to have social distancing for some time to try and not get us all sick. And therefore, some businesses are going to be very slow to come back. Now, there's other businesses that I imagine will come back very quickly. I'm sporting my own Corona Dome, some lot of extra here on the back. Really could use a trim, but out of solidarity, if my barber's not making money and getting paid, I'm not getting my haircut. The next time I do, I'll tip them for however many haircuts I've missed in the meantime. I expect there to be a line at the door for women getting their hair done, and for other, I'm going to call it spa and personal services. Now, there could be a problem with that in terms of social distancing and how many people they can get through and how many people they're going to allow in the salons. And that seems like, because there will be a rush by a lot of women to go get their hair done, that could be a possible place for outbreaks to kick off again. But I think that's going to happen quickly. So if I'm in those kinds of jobs where I think it's going to rebound quickly, then PPP is probably a better option for you, because you're not going to be on unemployment for 4 months. If you're still working and you have even half of your wages, then the PPP loan is going to be the right one, because the extra $1,000 you're going to get from the EIDL and unemployment, probably not worth the headache and hassle of trying to apply for unemployment. And I'll get to the unemployment stuff here in a second. So deciding which one you got to do, you got to run the math for yourself, and you have to say, hey, well, here's what I'm going to give up on one side, here's what I can get on the other. And what I did not see specifically in the rules, or I don't remember, is, can I do the PPP loan, and then can I wait and come back if this doesn't work out and apply for unemployment and still get the excess unemployment benefits? And I thought I read somewhere that you couldn't do that, that it made you ineligible if you got a PPP loan. You could no longer apply for unemployment. But I'm not positive on that, and I'm sure that's a game that some people are going to play. 2 months of PPL loans equals I pay myself for 2 months, then I go on unemployment and collect the extra. If we're still shut down in 2 months, That's probably going to be reasonable anyway, or they'll probably give us all more money. That's the best guess that I have right now. Now we'll get on to the unemployment debacle. And of course, this is probably the one that for the most people is the most impactful immediately. Obviously, not getting PPP loans quickly could be causing a lot more business owners to lay people off. And it's not like we haven't seen the unemployment numbers soar. From 11 million people applying for unemployment one week, another 6 million last week. And my guess is there's probably another 5 million of self-employed and independent contractors waiting to sign up that can't. So what's the problem with unemployment? Well, just like I explained the problem with the system of banks and the SBA and how big the pipeline is, you have the same kind of problems with unemployment, except for even bigger. So first off, the government's now saying people who were never eligible, who have never been eligible, ever, let me repeat that, never ever been eligible, are now eligible. Which means that you have a system that has been set up not to give unemployment benefits to self-employed people and independent contractors, now going to give them benefits. So no state has a system ready to integrate this new law because it's never existed before. So that's problem one, is what are we paying them based off of? Just like the problem we have with the PPL loans of how are we calculating it, unemployment office is going to have the same problem with calculating unemployment benefits. What are we basing it off of? They have specific calculations for each state that they've developed on how much we're going to give you for unemployment. Now all of a sudden you're telling somebody who's self-employed to fit into this system. That's a, square peg into a round hole. It's not going to go well. And so there's no system right now set up to take those claims and go, we understand how to calculate this amount. So instead the states are saying, hey, how about you, the federal government, tell us the amounts you're going to reimburse us, and you guys do this calculation for us. You set up the methodology for it. And of course, there's no answer there. No one has an answer. Second problem. You got so many people currently applying for unemployment on a regular basis that were W-2 employees before, the systems are already overwhelmed. Depending on your last name, Colorado right now tells you to apply on a specific day. It's like water rationing, where depending on how your address ends, you only water on Tuesdays and Thursdays. So if your name ends with an A or through F, then you apply on Monday, Wednesday, or Friday, but you can't apply on Tuesday or Thursday. This is how backed up the current unemployment system is. So again, we talked about the same thing with the banks and the SBA. The amount of capacity is this big and the amount of things trying to get in is huge. There's just not enough supply for it. So there's just unbelievable amounts of demand, no supply. And again, all these unemployment offices, A, got a new problem because the federal government just gave them something new to worry about. Ugh. B, you got a COVID-19 problem where you've got a bunch of people who are either not working in the office the same way, not working in the office at all, or social distancing in the office, or out sick dealing with their families, or daycare, or their kids out of school. So you don't have full staffing. So you have not full staffing, the greatest demand that unemployment offices have ever seen, plus another huge government program thrown on top of it that they're supposed to try and figure out. So I have a lot of empathy for the unemployment office right now. I understand why everything's getting delayed. And then you have the last one, the coup de grace of the reason that no money is being distributed right now for unemployment for self-employed people. And while, with the exception of the states of Illinois and New York, which are giving current unemployment people the extra $600 a week the federal government said, but they're paying it out of their own pocket, assuming the federal government's going to reimburse them. And as of Friday, those were the only two states doing it. And the reason is because the federal government hasn't given states any money. So states are reluctant to spend their own money without getting federal money first. And that's very understandable as well, because they only have so much money sitting in their unemployment buckets, and demand just went through the roof. They've seen the most unemployment claims ever in the history of the country. So we got a lot of problems with these programs, and essentially the way the government wanted it to roll out, and there's this has never happened before factor, right? When George Bush decided to give everybody stupid money back and send people checks, it turned into a mess. It cost so much money to do it was ridiculous and should have never been done. But there is no real good systematic way to get money into the hands of business owners and people, and change unemployment. You know, the $1,200 checks that everyone's getting that are basically a refund of 2020 taxes, that it's basically a tax cut that everyone's just getting up front. Some of those have started to arrive for people specifically, typically, who have already filed a tax return or who are getting Social Security and their banking information is up to date and verifiable with the federal government. That's made it a little bit easier. And they've now developed a system where you can go enter and make sure your information is correct so you can get your $1,200. But we've got all of these different programs they set up, all trying to run a ton of a huge amount of demand into very tiny supply line pipelines. So that's why everything is delayed. And I know that does not make anything easier for everybody. We're all anxious about our money and our finances going forward. We're all anxious about the economy going forward. We have no idea where all of this is going, how long this headache's going to last, how long we're going to be social distancing. We don't know any of these things. So our main problem is, where's my money? And I get it. I'm in the same boat. And I got a lot of other friends in similar boats. And my wife's waiting for clarification on how to go file for unemployment because she can't do many of the things that she was doing for her income. And that's affecting us as well. But you can't apply until the state's got definitive rules from the federal government and gets money from the federal government. So there's obviously, across the board, from every program the government has rolled out, there are major problems inside of each one. There are significant limits to the capacity of the systems that are designed and the people that are supposed to be running them right now. And those systems are obviously also affected by the COVID virus. So, in closing, everyone, please continue to have patience. Understand that it is not a personal thing. No one is trying to prevent you from getting your money. Banks are not trying to prevent you from getting your PPP loans. They are being conservative because their system is set up to do so. They are struggling with guidance on interim final rules. So nobody knows that these things are actually going to work the way that they said. Now, hopefully, a lot of that is getting worked out. It seems to have gotten worked out this week, where all of a sudden a few more cars got down the highway, starting to open up a little bit. If they actually processed 550,000 applications, that's amazing unto itself. If they actually shell out $141 billion in the next 10 days, that will also be quite amazing. Hopefully, the unemployment offices will get guidance and money from the federal government in the next week or two, and hopefully that money will start to flow, and hopefully those systems will be set up now that people can go and apply that previously could not. In the meantime, they're still inundated with more and more unemployment claims. So we all have to have patience. We have to acknowledge that these systems are not set up for this type of environment. Nothing is. This is a crisis across the board. I'm not going to defend the federal government and say they've dealt with it in the easiest way. You know, there are other ways to do it, and some other countries have different ideas, but who knows what's right? Who knows? But at the end of the day, we're left with what we got. So we go with what we got. And that means that right now we have to have a little more patience, and we have to wait for the federal government systems to catch up, and hopefully for them to start distributing some serious money. Then hopefully we can start playing the social distancing game once we've reached some of the peak of this virus and it starts whittling itself down. The last thing I want to say is we should all be wearing masks. Not for ourselves. When I went to Costco last weekend, I didn't wear a mask for the workers at Costco. For myself, I wore it for the workers at Costco. So they know that they don't have to worry about anything coming out of my mouth infecting them. I think this needs to be the case all over the place, where we all need to wear masks or scarves or whatever we can to cover our faces so that we are not potentially infecting other people. I know that that's not required since our president won't even wear a mask himself. But what if in the future going forward. Masks were easily and readily available. And I think of them as like the free newspapers that are set up. But those are everywhere, at bus stops, in airports, and readily available anywhere we have a lot of public infrastructure. That anyone who is sick, feeling sick, not feeling well, puts a mask on to protect their fellow human beings from getting sick from them. So let's wear masks, not for ourselves. Let's wear them for each other and to protect the people who continue to work and are continue to be put at risk so that they feel more comfortable going to work and doing their job. Now, I'm not going to propose right now that everyone try and find an N95 mask or a big respirator, because we do need those for our current soldiers that are effectively defending this country by taking care of its citizens, all the doctors and nurses that need that equipment right now. But over the long term, I have a feeling this is what we're going to need to go to. And every flu season, maybe with our new awareness, we'll have a whole lot less flu. So I encourage everyone out there to wear a mask, as well as have some patience. Your money is on its way. It's just locked up in a system not designed for what they've done. Thanks for listening. Catch you next time.